QuickBooks Pro Plus Desktop 2022 Balance Sheet Report Overview. Let's get into it with Intuit's QuickBooks Pro Plus Desktop 2022. Here we are in OneNote. If you have access to OneNote, would like to follow along, not required to, but if would like to, icon left-hand side, topic introductions, 2020 Balance Sheet Report Overview. Also note, take a look at the Immersive Reader tool, topic introductions, also in the text area. Same name, same number, but with transcripts that can be translated into multiple languages, either listened to or read in them. Same name and number as a presentation as well. Topic introductions designed to give a topic an introduction to the topic, provide screenshots, links when applicable, and accounting background to complement the presentations. Screenshots being something that can be useful to follow along with the presentations if you don't have access to the QuickBooks software. Closing the icon left-hand side, we're looking at the screenshots related to the Balance Sheet Report Overview. Balance Sheet Report can be found in the Reports dropdown or in the Report Center, as we see here in the Company and Financials. You'd scroll down past the income statement or profit and loss reports to the Balance Sheet Report. This is the top of the balance sheet, which is as of a point in time, as opposed to an income statement, which has a time frame, a beginning and an end. If you break down the balance sheet to its components, closing up all the little triangles, in other words, you get to the accounting equation, which is assets equal liabilities plus equity. Assets, what the company has. Liabilities represent third party who have claim to those assets. Equity represents the owners who have claim to those assets, which might be in the form of, in a sole proprietorship, the owner. Partnership, the partners. In a corporation, the shareholders. If we break out this part by part, starting with the assets, we have current assets, which are the more liquid type of assets, and the major groups of them, checking, accounts receivable, and other current assets. These groups inside the current assets are being broken out by the account type, as we can see here on the general ledger. It's kind of how the balance sheet is being built within the QuickBooks system. If we further expand down here, we've got the accounts receivable as another breakout. Then we can see that the cash accounts up top, and then the accounts receivable is another breakout or subcategory within QuickBooks, which is its own subcategory because the account needs to be treated differently within QuickBooks, meaning you have to track the customers. That's why they have a separate breakout there. And then everything else in the other current liabilities, including these accounts here, undeposited funds, inventory, asset, employee advances, prepaid insurance, and so on. The undeposited funds should be a cash type of account, but it's not a checking type of account. QuickBooks puts it down here, I believe, because it functions more like an other current asset as opposed to an asset type of account. So then if we further expand these items, we have the fixed assets, which could be called PP&E, property, plant, and equipment, or depreciable assets, the furniture, the vehicle, the buildings, construction, land, and accumulated depreciation, and so on. If we go to the liability side of the balance sheet, then we have the liabilities down below, current liabilities, long-term liabilities, and the current liabilities are going to be in here, which if we break out the current liabilities, these would be liabilities that are going to be due within a year. Long-term liabilities are those that are going to be due after that year's time frame. And then finally, the equity section represents the owner's claims to the assets. Can be one of the more complex sections because it can differ with the type of entity, but the concept of equity as a whole is basically the owner's claim to basically the assets, which could then be broken out differently by type of entity. Sole proprietorship, then having one equity account, or you could think of it as one equity account. Then the partnership having partner equity accounts, a corporation having the retained earnings and the capital stock, and so on as the equity accounts. The opening balance equity is kind of a weird account that we'll get into when we start a new company file. It really shouldn't have anything in it, but it's useful to start the company file. We'll talk more about that later. The capital accounts for a corporation, retained earnings related to a corporation. The retained earnings represents an account that's going to be closed out into by the income statement. We'll discuss more in the presentation. Net income is not something you'll typically see on a financial statement on the balance sheet, but QuickBooks tries to put that in there to give you the relationship between the income statement and the balance sheet. We'll talk more about that in the presentation if you would like more detail on it. So then we've got the loans down here below. So here's a breakout of the loans on the liability side of things and another look at the equity. Obviously, assets equals liabilities plus equity, the balance sheet being the accounting equation.